Thanks for clicking. China's real estate crisis continued to worsen in May, according to new data released this week showing that sales continued to slump due, at least in part, to China's zero-COVID policies.
It's not our fault.
We also received another major warning sign for China's real estate developers as state-backed firm Greenland Holdings, keyword there is state-backed, received multiple downgrades and bond sell-offs after proposing a repayment plan of a bond coming due on June 25th. With that less than stellar news in mind, there was some good news as lockdowns have ended in Shanghai, enabling 22 million residents to go back to work, to leave their homes.
Your generosity is overwhelming.
So what I want to do today is discuss the real estate data coming out of China, go over the growing worries over Greenland Holdings and the rest of the real estate sector in general, and then I want to discuss China's economy in the post-lockdown zero-COVID world. With Shanghai opening back up and Beijing easing restrictions, we'll find out in the next few weeks and months whether or not China's economy can return to normal in the face of the post-lockdown world and its continuing real estate crisis. We'll have updates on China's economy, on China's real estate crisis on this channel every Friday. Click like and subscribe to get those updates, but for now, let's get into this real estate sector. New data emerged this week in China showing that the top 100 developers underwent a 59% drop in sales since this point in time last year. This continual slump in real estate sales in May, though not surprising given the extent of the COVID lockdowns and China's zero-COVID strategy, are nonetheless concerning, especially given China's recent efforts to prop up the real estate sector, lowering interest rates and pumping stimulus into the economy. Indeed, we also received news this week that the slump in sales is not only due to a lack of credit. In fact, banks and lenders have been awash in funds, but households have been unwilling to take on any new loans, given the uncertainty brought on by China's zero-COVID strategy. So despite Beijing's best efforts, encouraging banks to lend, stimulating the economy, lowering interest rates, households are still shaken and are not entering the real estate market.
What am I, a toxic person?
And this is obviously going to hurt China's real estate sector, which wasn't doing very well to begin with. We received news this week that Greenland Holdings, once considered one of China's stronger, more resilient real estate developers, had its ratings downgraded this week after the developer noted it might not be able to make its payments and asked for a one-year extension on a $488 million loan due June 25th. And Greenland might sound familiar. We've talked about this real estate developer on this channel before as one of those firms which have tried to unload their international properties in order to shore up their positions at home. Although this is certainly not China's first real estate developer to default.
I'd say that's an understatement.
And definitely not the first developer that has been considered strong, only for investors to find out later that they weren't. Remember Shimao, Sunac, Logan Holdings, etc. Greenland's downgrades, Greenland's potential inability to make its payments is noteworthy as it's widely considered a state-backed real estate developer, with the Shanghai government being amongst its shareholders. And this really just adds to the liabilities of the Chinese government, which are growing more and more the longer this real estate crisis continues. The more Beijing has to prop up both the economy and the real estate sector, which represents, as we've mentioned, 1/3 of the economy. And the downgrade, as always, as we've talked about so many times on this channel, raised its concerns about the other real estate developers in China, as more and more developers that were once considered strong, again, Shimao, Sunac, Logan Holdings, as these developers that were considered safe, considered strong, when they default, when their debts are uncovered, when it looks like they can't pay their debts, it raises questions about the rest of the developers.
They're shifty.
Soon after Greenland Holdings' downgrade, Country Garden, another major real estate developer in China, saw a major sell-off of its stock. So, major real estate problems continue in China, with a 59% drop in new home sales from this point in time last year, and the real estate sector constitutes almost 1/3 of the Chinese economy. So you really don't want to see a nearly 60% drop in sales if you're relying on that sector to drive the economy. And then we're seeing more and more defaults, more and more problems from even the stronger developers in China as well. With that said, there is some light at the end of the tunnel. With lockdowns ending in Shanghai and Beijing easing restrictions, China can now get to the work of re-stimulating the economy. And with the lockdowns ending, China is wasting no time moving on getting the stimulus going, outlining measures this week including tax cuts, infrastructure spending, and job subsidies. Beijing also ordered state-owned banks to set up a $120 billion line of credit to support infrastructure spending, showing that Beijing does plan on returning to its tried and true method of economic recovery, spending on infrastructure. With that said, although Beijing plans on moving fast, recovering from these lockdowns quickly, the zero COVID policy remains, and China is more than willing to re-lock down the economy if need be.
Don't put me to the test.
And this definitely has some manufacturers and other businesses questioning whether or not China is the best place that they should be operating. As these lockdown measures show no signs of abating, no signs of going back from this zero COVID strategy that China has implemented, it's not clear that China is going to be where the profit is in the coming years ahead. And this is big for us in the West, in Canada and in the United States. China has been the global manufacturing hub for at least the last 20-30 years, and if manufacturers no longer think that China is the safest place to park their investment, the safest place for them to operate, then this could obviously have global ramifications. As we said, China has been the world's factory. So, the success or failure of China going forward will largely depend on their ability to re-stimulate the economy in the wake of these COVID lockdowns, while still maintaining its zero COVID strategy well into the next few months and probably years ahead. We'll obviously have updates out on their ability to get their economy back up and going and to effectively manage this real estate crisis, which just kept on getting worse throughout these lockdowns. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.